Are you too late? Have you seen some gains for Ethereum, Chainlink, Yiffy, Aave, and more? I think that's how you pronounce it. And it's getting annoying. I want to start by saying that we are in a bubble. As with all good things in crypto, we overvalue things. Whether we are in the beginning of one or the end of one, I don't know. Here's what I do know. According to data from June Analytics, DeFi protocols have been used by 400,000 users. This is considered to be an extreme overestimation, as the writer has at least 9 addresses himself. I too have at least 10. So what is the real number? 200,000? Less? It's not many. To put the 400,000 user metric into perspective, here are some contexts. Robinhood has approximately 14 million users. There are around 20 to 50 million people estimated to have owned Bitcoin or currently own Bitcoin. An estimated 33% of American adults have non-retirement investments. So that's a lot of potential people still trying to get in. So that's cool and all, but what is going to drive the price appreciation for Bitcoin and Ethereum and a few others? Ghost chains represent a $50 billion growth opportunity for Ethereum and DeFi. The ghost chain reckoning is coming. There is well over 50 billion in market cap, value for chains no one uses. They will all be usurped by DeFi apps with actual uses by the end of this market cycle. That's one way of looking at it. I'm not sure if I wholeheartedly agree. It makes sense it would happen, but it might not. It's not like, for example, Litecoin. I'm going to pick on it here, right? It's not like Litecoin's value ever derived solely from its blockchain usage. After all, we have many ghost town coins in the top 20, even the top 10. For me, ghost chains are more like liquidity tokens, where they are good to trade when they oscillate low against Bitcoin and nothing much more than that. But it's good food for thought, nonetheless. What I am more bullish on in this DeFi space is sushi. No, I'm joking. Did you know that in centralized finance, your money is insured? If a bank should fail, you'll receive your money back, up to like $100,000. Perfectly fine for the most of us. But if you have 1, 10, even $1 billion, that's pretty concerning. So you have the stock market, equities, bonds, etc., and for the most part, that's just fine. What if they cotton on to the fact that if they put their money into crypto, stable coins or otherwise, and put these things into decentralized finance protocols instead of centralized finance ones, they can make even better returns? What if they realize that simultaneously they can insure those funds with protocols like Nexus Mutual, offering more coverage than banks offer? Is this one of the best risk to reward capital protection strategies available? And if so, what happens when more people realize this? Wouldn't it be funny if institutions try and get in when we've been here since day dot? Now, let's be real, it may take some time. It may take the dying off of the old guard to be replaced by millennials who inherit this wealth, who are inherently more trusting of crypto for this to finally become the status quo. And that's kind of like the worst case scenario. But I tell you, this would be very good for Bitcoin. This might be more good for ETH and YFI in the short term. An Ethereum vault is opening soon on your Finance, allowing you to farm directly with your Ether tokens. I'm guessing, because this isn't deployed as of yet, but I'm guessing this will become very, very popular. We can already see ETH being locked in protocols exploding and amount held on exchanges decreasing. This could be very good for the future price action of ETH. Once people realize this is possible, I am certain Bitcoin is next. So cheer up, Bitcoin holders. This is a weird and crazy thing that's happening, which you might just have to trust me is ultimately good.
Wow. Nice. Okay.
But I think I upset a few maximalists with my last video. It's easy to say something new and scary is just a Ponzi because you fear what you don't understand, but putting your money to work to earn transaction fees and instead of sitting idle is not just another BitConnect, and you are doing yourself a disservice in thinking so. In fact, let's compare decentralized finance protocols to BitConnect, which is a shame that I have to do this, but it's a funny thought exercise. Revenue model. Pooling your assets and earning transaction fees from traders. It's what exchanges do, but now we are the exchange. For BitConnect, a trading bot, which never existed. Truthfully, new money pays the old. Classic Ponzi. Number one is sustainable as long as people trade crypto. The other one is unsustainable. Opaqueness then, what do we know? One is open source, audited, and tested code. The other one, we know nothing. It's completely opaque. Let's talk about shilling, as I was accused of by like one person in the last video. Shill on this side, and the less you earn. Makes sense. Your percentage share would go down the more involved. On the other side, shill to earn more. In fact, a very heavy emphasis on referrals. Participation then, how can we get involved? You can maintain 100% exposure to Bitcoin, Ethereum, or stablecoins. And on the other side, you must buy their own native token. Wow, great. Let's talk withdrawable. On the one side, you can withdraw anytime. The other, locked up. I forget how long. I think it was like a year. Too good to be true was a comment I got a few times. On one side, replicating what every centralized exchange already does. And on the other, someone with a super duper trading bot wants to share their crazy profits with you. Which one of those sounds too good to be true again? Do you see how we are not comparing just apples to oranges here? We are comparing apples to literal dog turd. And it doesn't bear any fruit. Centralized exchanges need to fear. They need to fear that their reign is coming to an end. Now, to be fair, channel partner Crypto.com is actually doing that. I mentioned in the last video that you can now earn some decent interest rates with them for practically every coin. And now, when using their exchange, you get paid to trade. This type of stuff would not be happening without the DeFi movement. They are adapting to stay relevant. The others need to do this as well. They need to offer us a better deal, or we will just do it ourselves. We don't need them anymore. I actually can't believe it's taken crypto this long to start doing this. All this money involved, all these years of development, and this is what we have to show for it. We earn money by coin going up. Wouldn't you rather these coins generated some value too? I expect even more, to be honest. You should expect even more. A lot more decentralized finance capabilities, taking the powers away from the powerful and giving it to the people. It's what got me hooked on Bitcoin all those years ago. 2017. The hot take I have for you today is if you like to stack sats, you can stack more sats by wrapping your Bitcoin onto Ethereum and putting it to work. I know that might be very painful to hear for diehard maximalists, but what do you think banks are doing with your money? They just sit on top of it all? No, they put it to work. Why are we not allowed to do the same? Why are we not allowed to be our own banks? Isn't that the whole point? Bitcoin is decentralized finance. It started all of this. I can only imagine Satoshi himself would be impressed that we are replicating more of what banks already do and which can be done on top of and all within Bitcoin in hopefully not too distant future. So to answer the question posed by the title of this video, is it too late? Well, it is in my profound, important, and completely unqualified and should you even really care opinion that things are only just getting started for Bitcoin and Ethereum holders. However, and I feel I do need to discuss this with you, I would be remiss if not. Something that, when you realize it, changes everything.